life, real life, a thing that we have been denied for far too long. Good morning, my neighbors! Hey, fuck you! Yes! Yes!
I'll cut it off right there because I don't know if you got kids around you or anything. But yes, good morning, my neighbors. It is Thursday, January 19th. It just turned 6 o'clock, and yesterday could not have been better. Had you drawn it out and had Steven Spielberg as the director. We opened up, went up there right to that resistance line from 2022, all down there, and then all of a sudden, the news came out that Jerome Powell has COVID. We got an old saying here that we've had for years and years for all you new members. News hits when the charts are ready for it. And I've been priming you up for a few days now, talking about how the charts are ready for it, the charts are ready for it, the charts are ready for it. We broke down below that 200-day moving average at around 11 o'clock in the morning, failed it, never went back to go see it, trolled around for the rest of the day, and then that final 15, 30 minutes of the day, right down to say hello to the 50-day moving average and say, good morning, my neighbors, because what we've got going on right now is, first and foremost, 150% on the credit spread that was posted on Monday or Tuesday, the 4005 4000s, 150% on the credit spread that was posted yesterday, the 4010 4005s. So quite obviously, all of the other spreads that were under it, below it, with a little bit less risk, all of them performing fantastically and paying full credit at the end of the day. The January 20th trade of the week that I had given out there on the weekend, given out prior to the open on Tuesday, buying the January 20th SPX 4005 calls, selling the January 20th 4000 calls. Not the 4005s. You're making too many typos there, Tim. You're getting too old. And as you see there in the screenshot that we shared there in the chat room, we shared there in the email, the 4005 4000s were $3.20 on Tuesday. As of right now, they are at 15 cents. So should you decide that you wanted to close those out, had you been involved in them, you're getting a $3 credit on less than a $2 risk, which is a greater than 150% return. Now, for where we are, before we go through that, I do want to show you as well what we've got going on over there in the alert room in case any of you guys missed it, because I did say yesterday morning around 8:30, we are so set up for a proper 2-day puke in the markets. Jerome Powell had COVID. News hits when the charts are ready for it. I shared over with the participation puts. I've been saying in the emails, this isn't something that you need to go be focused on because we're waiting for a dip is what I've been kind of looking for. Waiting for a dip, let the charts cool off, and then we head into the big tech earnings week where they've lowered everybody's guidance level, so it's pretty easy to match or beat. And then we've got the FOMC meeting coming up on February 1st, and then we've got CPI coming out on Valentine's Day. These SPY 395 puts for this week at 82 cents only made it to, where was it? Do I have it? $4.23 yesterday. The January 20th QQQ 280 puts at 90 cents only made it to $3.26. And the January 27, 395 puts at 208, made it only to $5.67. Now, we're not done yet. Here is the ES. The ES is down 24 points as of right now. We are perfectly filling that gap that we spoke about over on the SPX, right over there to that 39.19. Just going to pressure that 39.08. And from a picture perfect point of view, should we be able to, we'll be able to get that revisit down right down here, which I'll zoom in a little bit, just below 3,900, right around the 20-day moving average, just to go and sweep everybody out. I can pull it up here to see it in a little bit better of real time on SPY. SPY, here we are, right through that 390, exactly what we were talking about, possibly looking for that 388 area, and we'll slowly start finding some kind of weakened selling or better support as we got our nice 2-day sell down after we had that stop run with the 400 print over there. So coming off that, back over here on the ES 4 hour, as you can see, oversold. Very, very oversold on the 4-hour charts. These will only be applicable when they fit over onto the index charts, where when we ended yesterday, I'm not going to pull it up on the screen, but the Dow, the SPX, and the NDX all ending the day very, very close to being aggressively oversold on their 4-hour charts. So the dip should be done. And on top of that, I got my VIX 2102. 2102 has arrived. That's the minimum that I was looking for. So this morning, as we get open, I will be closing out all of my puts positions. And you guys can see what I shared there in the chat room yesterday afternoon prior to the close. And what I will, again, put into the email just to give you an idea of where my headspace is. With the QQQ, perfect little dip that we got right back down to that 275. Now from here, again, cooled it off. Now we should have enough energy that it could start pushing for that 297 with big tech earnings. 286 is going to be your problem. Until you get through 286, you can forget about talking about 297 and 300. That's what you're going to be looking at right there. This is your big CPI move, FOMC move, whatever day that was back on December 13th. Doesn't make a difference because it was before. Tonight is Netflix. I don't trade earnings. You get 4 earnings reports in the course of a year. So 252 minus 4 leaves you 248 days that you can trade without having to be involved in earnings. I don't trade earnings. However, I do have everything charted. Now, I could pull up my Netflix chart and you could look at it and go, well, what the hell is that? Of course you're going to be right. You got so many lines. Those lines are only applicable when you're at those levels, which is why right now your major problem is 350. 350 being that's 50% from your all-time highs, and it's right over here where you closed prior to that big gap down in April of last year, where you sold off down to the lows over here at 162, which was the 76.4 from your all-time lows, and boom, it's up over 100% since it posted that low. Some people will be looking at it in that aspect, but you got to look at this thing. It's above the 200-day, above the 100-day, above the 50-day. The 50-day, 100-day, and 200-day are all stacked. 200-day hasn't curled over yet, but give it enough time, that 200-day will start curling over. Me, from my point of view, I would go, if I was going to play this, I would take next week 400 calls. As I remember looking at them, and I'll pull it up here real quick because we're at the end of the video anyway, and most people have already turned me off and said, you know, you were really rude for posting that Eddie Murphy joke in the beginning. I didn't want to start my day thinking about vulgarity. But, you know, you live in America, guys. Vulgarity's everywhere around you. That's all that it is. And, oh, I posted this yesterday. The January 27th 400 calls, when I posted that in the alert room, they were $1.25. They're now $1.54. And again, you're looking at a plus or minus 38-point move is what it's implying for. When you come and look at this week for, you've only got one day, it's implying a 31-point move plus or minus and 190% implied volatility. So you're going to pay through the nose if you go out here and try and play this, which expires tomorrow. These 400 calls are 74 cents. The January 27th calls, 27 400 calls, are $1.54. They were $1.25 when I posted in the room. I mean, why in the world would you go and risk money that expires tomorrow on something you have absolutely no idea that's going to come out with an earnings play? So, again, here's your earnings. I'll zoom it out for you here onto a 30-day chart. You can see on the 30-day, again, bullish, 50, 100, 200. 200 hasn't curled up yet. You are in this little area where it's being a little bit of a problem, and that is your gap that hasn't been filled from when it fell out back on 349 in April of 2022. You do have great support at that 286, but I'm not going to go out here and guess about Netflix. So Netflix, you got there. QQQ, guess what? Netflix is in QQQ. So is Apple, Amazon, Tesla, Facebook, Google, and all of those guys report next week. So, you're better off having a little bit inside one big bucket instead of having a whole bunch inside a bunch of little buckets. Consolidate, don't overexpose yourself. The VIX 2102 already reached. ES, I love it. I love it. I love it. I love it how it's oversold over here. In my view, the dip is done. Good morning, my neighbors. Have a fantastic Thursday. And yes, I am full of piss and vinegar today. I will see you in the chat room.